Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It is Tuesday morning, March 9th, 2021. We got it all for you today. We're going to talk about technology stocks. We're going to talk about bond yields. We're going to talk about electric vehicle stocks. We're going to talk about the granddaddy of all tech stocks today, Apple, and some new developments. And we're going to discuss, is Apple one of the best stock picks right now as it's starting to move lower, getting a little bit of a bounce today in the futures? Is Apple on sale? I know that sounds crazy, especially prior to the stock split last year when it was just literally on fire. Since the stock split, it's kind of died out, but they have new stuff going on that we're going to discuss today. I guess the first thing we're going to talk about is a reality check. Even though we're going to talk about Apple stock and the augmented reality of their new technology that's coming out in the next year, a reality check on the market right now. If you feel like you've been trying to pick stocks and you have whiplash right now, you're not alone. Trust me when I tell you that right now. It's been a time for patience, probably lower position size. As I mentioned in yesterday's video, I've lowered my position size just because it's the smart thing to do right now. There's little pockets of opportunity. We actually had Disney stock explode yesterday into new all-time highs. We're going to discuss that in a second as well. But I want to tell you this. I want to be straight up with you. If you've been trading for more than a year, I want to be very clear, more than a year, somebody who's experienced more market conditions, more stock market conditions than only the stimulus package that got fueled off of the pandemic lows in March of 2020, you understand that the market just doesn't go up every day. So the last few weeks, I would say, where we've had kind of a back and forth, that's kind of a more of a normal market where you see the stock market rally for a few weeks, pulls back for 3 or 4 days, maybe even pulls back for a week, then catches a bid again and starts to take off. The long-term trend in the market right now is still clearly higher, even going back to just November. Depending on how you look at the market and whether you use moving averages or candlesticks, multiple time frames, whatever it happens to be, the market did technically crack. It was the first sign of the market breaking below the 50-period moving average. However, if you did watch one of our videos last week, I believe it was Thursday or Friday, we said we had a very clear line in the sand. We needed the SPY to get back, the SPY ETF to get back above the 50-period moving average, which is where pretty much everybody said, now the market's rolling over. Now the market's in a confirmed downtrend. But I got to tell you, we had a lot of conversations. The first time it rolls over, you don't want to be what do they call all the early pioneers had the arrows in their back. You don't want to be one of those people. You do not want to be short selling into what is still a bull market the first time it makes a U-turn. You want to wait and get a little bit more confirmation. You want to get at least a week. And we've talked about this over and over and over again. If you really want to get in there and trade stocks with the smart money, trade stocks with the deep pockets, you need a little bit of confirmation. Again, if you could think 1 day of buying versus 1 week of buying versus 1 month of buying, those are bigger commitments. Buying 1 day is great. We're going to get a higher opening today. It looks like we're going to, the stock futures are up 40 points at this point, the S&P 500 futures. A big reversal from yesterday. We did, however, say that the market was well bid, which means even though we closed near the lows in the SPY ETF, which we're going to take a look in a second, we still had higher highs and higher lows. So think about what that means. Keeping things basic, keeping things simple. You do not want to make trading complicated. You do want to make your stock trading simple so that you can look at something and have a decision like that. We had a long call last night and a game plan session with our exclusive members in the boot camp, and we went over it. The market is not clear right now. You need trades at both sides of the market if you like to short sell, if you understand short selling. If you don't, then we just sit back and we patiently wait for new longs. We had some good opportunities yesterday. They were not bountiful, but there were certainly some opportunities. But my point is this: 1 day of selling, 1 day of cracking below the 50-period moving average is not enough. You need to see it over time. You need to see the weeks starting to roll over with consistency. We've been rolling over, catching a bid, rolling over, catching a bid. And when I say catching a bid, that means the buyers step in and stop it from going down. That's when we saw yesterday, despite the market trading lower, the SPY ETF, and I'll show you on the chart in a minute, still had higher highs and higher lows. I did my game planning last night, planning for the market to trade lower today based on yesterday's close. It's not opening lower as of right now, 3 hours before the market opens. That's fine. I have ideas on both sides of the market. You need to plan going into the day, knowing exactly what you intend to do. So if I'm looking for the market to trade lower and catch a bid, but it catches a bid early, that's fine. Now I just adjust how I plan to enter the trades that I planned on buying today. And this is stuff that you really need to do. Keep it simple. Whether you're trading tech stocks, we're going to talk about Facebook, Apple, Google, Microsoft today, whether or not they're trades. It really comes down to this. You need to go into each day, each week. And it doesn't matter if you're day trading. It doesn't matter if you're swing trading. You need to go into the day and the week or whatever trade you happen to be putting on, knowing what your risk is, knowing what your conviction level is. Like I said at the beginning of the call, higher or lower on that scale. And then you need to know what your profit targets are. And when you put those trades on, or even before you put the trades on, you need to know, does the profit potential justify accepting risk? Keep your trading that simple. If you're going to put on a trade and take risk, does it justify taking that risk? Does it justify accepting that risk? Because the profit potential is very obvious, because the profit potential is likely. We have some trades that are that way. Tech stocks are getting news this morning. Not many of them are in a screaming uptrend, which is why we have is Apple on sale right now as it's pulling back. Are we going to regret not buying Apple now less than $120 6 months from now when all of the stuff that we're about to talk about plays itself out? We'll find out. We're going to look at the charts now. We're going to take a look at the futures. We're going to look at the headlines. Bond yields are trading. How many people have never discussed bond yields at all? And now it's in the news every single day. That's why we're doing these videos every day, to keep you informed, to give you ideas. And I think really specifically, be patient. I just can't stress enough. If the market is not lining up, if your stocks are not lining up the way that you see them, stay in cash. You don't have to trade. You have to trade when there's something to do. You don't have to trade just because the market opens. So if you find these videos helpful, I want to find out what you want to learn. I want to find out what you're trading. I want to have a dialogue. Click down and give us a thumbs up so that I know that these videos are stuff that you enjoy, stuff that you're getting value out of it. After you give us a thumbs up, definitely click down and subscribe. This way you get updates. That would also mean the world to me. It lets me know that I'm waking up super early and I'm helping you. So give us a thumbs up. We're going to head on over to the charts and we're going to take a look at the news that we're looking at right now. So again, as we talked about right now, the NASDAQ, which was basically in the doghouse for the last few days, you can see now that tech stocks and specifically the NASDAQ 100 overnight, again, market's not open yet, 3 hours from now, overnight, we're rallying. Again, a lot of talk about bond yields. You haven't really probably ever talked about bond yields in your whole life. Now we're talking about, everybody probably knows 1.59, 1.6, and gets above that level, spooks it down, inflation creeping into the market. In one day, the market reversed all of that conversation. And the day hasn't even started yet. It's still pre-market. Getting into Apple. Apple, big conversations about mixed reality, augmented reality. So here's the thing. We talk about this often. Now we're talking about a little bit longer term position. We're talking about a little bit longer term stock pick. We've seen in the last 6 months specifically, and maybe even dialing it back a little bit less to November 2020, when a lot of positive vaccine news started to come out, and all these stocks that were beaten down, airline stocks, cruise lines, all of that kind of stuff, sporting goods equipment, Dave & Buster's and all of those, we're calling them get out of the house stocks, right? They all started to bounce as the vaccine news came out. Now, nobody's getting out yet. We're kind of like slowly working our way towards that. But here's the point that I want to make. The stock market discounts into the future. You're buying today for where we believe stock prices are going to be in the future, some point in the future, 3 months, 6 months, a year. So when we're talking about buying Apple stock, that's what we're talking about right now. We're talking about the stock has had selling pressure. It's been getting pushed down in multiple timeframes. It's in bearish order flow, as we call it in the boot camp and in our community. But has the story changed? Has the story now gotten to a point where it's getting low enough and pushing itself down where the future earnings on this new technology are going to bring it back up to nosebleed seats again? But we want to already be long before it happens to get up there. So we're going to take a look at the news. We're going to take a look at the headline. And sometime within the next year, they're saying early 2022, which is really not that far away. So the question is, do you want to sit on your hands right now and wait for this to actually come out, for them to be the leader again in what they do and watch this take off without you? Well, let's first talk about the futures. You can see the futures are up 42. We're going to dive into Apple. And we're going to take a look at whether or not The stock is at a discount. Now, clearly, first we want to start out in the monthly chart. We work our way down, what's known as top-down analysis. Apple is not that far from all-time highs. It's really within one good rally hitting all-time highs. So it's not exactly rolling over and in bear market territory. It's simply dormant. And you know the old phrase on Wall Street, never short a dull market, never short a dull stock. The tape has clearly changed over the last 6 months, but we're not seeing selling order flow. Now, we dialed a little bit deeper into the weekly chart, and you can see this is what's interesting. The last couple of weeks, Apple has seen a little bit more selling, maybe with the rest of the market, but think about this. And this goes back, way back in the beginning of Wall Street. Everybody knows, buy the rumor, sell the news. We're seeing the stock come down. We're seeing a rumor of this technology getting closer. You're going to buy the rumor now, or you're going to buy it as it starts to head down, looking with proper risk management, proper share size, where you put in minimal share size on your first entry, get feedback from the market, you watch the stock rally a little bit, only then do you start to build the position. And then when the news comes out over the next 3 months, 6 months, year, whenever it starts, maybe even 2 weeks from now, where it starts to get a little bit closer and it's a little bit more tangible, that's where the stock starts to rally. That's where everybody who's late, who didn't get it at a discount, starts to hop on board. Something to keep an eye on today. I am actually going to have this in my watch list over the next couple of months. Next, we have Disney. Disney, all of a sudden, new all-time highs yesterday. Bullish gap exploded, and obviously, get out of the house stock, right? So we're going to take a look at Disney now. Also going to be in the watch list. And again, just to give you some context, zooming out a little bit further, we are at all-time highs here. But the impressive thing yesterday, in a day where the market was pretty nothing really going on, Disney had a bullish gap higher, held the opening price, stayed there, and to give you some context on an intraday chart, in case you happen to not be a trader, held the bid the entire day. And held the bid means that there were buyers under the market. If selling came in, the buyers held it up there and pushed it up to new highs. Looking at Disney today for some follow-through. Speaking of old school stocks, speaking of stocks that are interesting, United States Steel actually traded into what we call a fuel candlestick yesterday, large green candlestick, larger volume, breaking out of recent trading range. In the watch list today to look to start building a position. Looks like it's going to open flat. Over 24 is a better trade. Today would be the first piece of a new trade and look to add over 24. We mentioned the airline stocks. Again, look down in that right-hand corner. UAL is up almost 70 cents. I like this better over 56. I want to be clear about that. We're looking at Love, Southwest Airlines, which exploded yesterday. Again, another fuel-type candlestick, bullish gap, follow through, bigger volume. Again, what are we looking for? The smart money is involved right now. The smart money is pushing it. Average retail traders can't push it like that. Oh, wait, take that back. Maybe there's that other stock out there, that meme stock. We're talking about in a normal market. We're not talking about one stock with a massive short shift. We're looking for smart money over time. We're looking for smart money that pushes the stock and keeps it there. LUV matches that criteria as well. A couple of other stocks that are get out of the house stocks that have made the list. Dick's Sporting Goods. You're starting to see a theme here. Get out of the house stocks. Increased volume. Large green candlesticks. Held the open here, pushed up here, closed near the highs. NUE, not exactly get out of the house stock, but how do you ignore that chart? That chart looks good. That's screaming at me. Smart money is getting involved. Look for a spot. Same thing with CF Industries. New 50-day highs and more. Looking for this to follow through. On the other side of the market, before we get into possible short sales and an industry that's been beat up recently, let's take a look and see if there's anything to do in some of the other big tech stocks. Now, they're all opening higher this morning or set to open higher. Let's be clear. Facebook stuck in the middle of nowhere. Nothing to do yet. Microsoft actually pulled back, started, if we throw it up here, it's actually right around this previous breakout point. So the fact that it's holding the bid there, that's pretty interesting. In this particular instance, this is called buying in the hole, where a strong stock pulls back, holds where it previously broke out from. Because think about it, that's where the smart money catapulted first. They're still sleeping in that area. They wake up, it comes back. They're like, oh, had to get all the way back down here. We still like this stock. We're going to hold the bid here. So Microsoft, a lot more interesting here. Google holding the bid after that big gap up, and earnings staying there. Amazon, again, Amazon actually broke down yesterday and got below this monster trading range. Look, Amazon, that's the right price. I don't see an edge in Amazon yet. Netflix is one that we haven't traded in a while. And you can see, again, sticking with the theme, we started out, do you have whiplash? This is why. Not clear. This stock has not moved. I haven't traded actively this stock probably in 6 months, maybe 1 or 2 trades at the most, where it might have been a really good day trade in one particular instance. No edge to order flow in Netflix. So out of everything we discussed, Apple and Microsoft, those 2 old school buddies, are looking like the ones I'm going to be watching today. As far as the electric vehicle stocks, NIO and XPEV, which had earnings yesterday, they are beat up. They are, for me personally right now, nothing more than short sale candidates. I am not looking to buy them. I don't see them as bullish order flow confirming it. I know we spoke about XPEV. I know we spoke about NIO down in this area, but I also said that I want, remember I started out before, at least 1 day to compare it to 1 week. I want to see more than 1 day of buying. We're going to get a little bit of buying today. Maybe it'll be a day trade, but as far as leaning in and getting a longer term view of this stock that doesn't change from the earnings the other day, I want to see smart money coming in for at least 5 days and saying, okay, we think based on our deep research, based on our deep pockets, it's reversing now. This is the right price. I want to see that happen over 5 days. So today, these stocks will be a day trade. Hopefully, Tesla, I know there's a lot of Tesla maniacs out there, pulled back. Let's see if the stock reverses. As of right now, I'm not seeing anything but short-term selling. So, gosh, there's a lot to do right now. Get fired up. The market's looking like it's going to open up today. Have your game plan ready before the market opens. You need to know exactly what you plan to do before the market opens. That's where stress-free trading happens. Everybody says that trading is stressful. Trading's not stressful. The trading part of it is the easiest part in the world. This is the part where you put on your overalls and do the hard work and you find the ideas. Spend an hour, spend 90 minutes after the market closes or whenever you can. Find that bunch of ideas, drill down a little bit deeper to find the ones that match your criteria, and then you put them in your game plan. If they trigger at the prices that you want, if they give you buy signals, jump in there with confidence because you earned it, because you did the homework. If you don't do any homework and you're not doing anything other than, hey, let me pull up a scanner and see if anything's up pre-market, that's not enough. That's not enough. You're not going to have conviction. So again, thank you so much for joining me here today. Click down and subscribe and give us a thumbs up if you find the videos helpful, and definitely comment. Click down, leave a comment, ask a question about anything we talked about here. We always get back to you as soon as possible. Have a great day, everybody.